Good morning, Predicted Trades family. Hope everybody's doing well. It is Wednesday, halfway through the week. This is day 2 of using my new mic. Hopefully everyone can hear me. Hopefully, um, hopefully this new mic is not too quiet or anything like that. Just let me know, because I can always switch back to the other mic for prep. Rose Casanova, I'm seeing on the YouTube chat. Music reminds you of an 80s horror movie. That's perfect. I think Richie picked it the Halloween season to have that kind of spooky song. Probably time to switch it up now that we're halfway through November. But let's dig in. First thing I want to point out is we have our daily squeeze and 2-day squeeze top that we have been running into. And this is exactly why we track these things. We can make a hard push up, but once we arrive at that daily squeeze and 2-day squeeze top, that's when the price action starts to go sideways, and we slowly start to push more and more into that squeeze top, trying to get it to fire to the upside. Whereas before that, we had lower time frame squeezes that we push through, and then we get our big push up. Point being, to continue higher, it's going to be a struggle where we keep pushing into this daily squeeze. We try to get up to that daily 200 MA, and we try to push up to this pink line, which is the trend line from highs of this year. Can we, can keep pushing against this squeeze top, ultimately fail and start heading back down? Yes, that can absolutely happen. And now we have our 4-hour squeeze popping up and nice and thick. And the bottom of that is near 39.41. If you guys remember, the thesis going into this week, we had a good push up and got above this 3922, 3900, and 3878. And I said, going into this week, even if we have a pullback to those things and bounce, it's still very bullish. Well, we kept pressing and haven't gotten down to test those items. Now, our 4-hour squeeze is starting to pop up at these higher numbers, 39.41 and a half, and our daily 8 is also slowly catching up there. Point being, we now have a line in the sand. If we start to give out 39.41, 39.33, then coming down to test these levels that I mentioned as good spots for a bounce, if we start to give out these squeezes and 39.41, then we can get down to test these levels and this gap from CPI. We close down near 37.50 and we open near 38.78. So if we start to break down this 4-hour squeeze, we know where we're going for the first test. And if we can't hold up to this gap, then we know we can start to slip into it. Right now our daily 21 sits pretty much right at 38.55, and our daily 50 is flatlining right at our key level at 38.07. Just want to point these out because if we do start to give out this 4-hour squeeze, because we can't push through these daily and 2-day squeeze tops, then we can expect a revisit of these levels, the top of this gap, the daily 21. In fact, we might wait another day or two for this 21 to catch up to the top of that gap fill, so that when we test that gap, we're also testing the daily 21 and could catch a bounce right back up. And should we start to give out the top of that gap in the daily 21, we know we're going to the daily 50. And even getting down there and bouncing is still progressively higher lows. So just wanted to point out those items below this 4-hour squeeze that we are starting to settle into. We arrive up at the top of a daily squeeze, all of our intraday lower time frame squeezes start to pop up. That's going to be the marker for breaking down. We start to fire these intraday squeezes to the downside, then we know where we can be going. Before I go or start getting too far into where we can go today, let's pull up a economic calendar, take a look. For Wednesday, we had some retail sales and import prices and whatnot that just came out. Got a little bit on home data and business inventories around 10 a.m. Some Fed speakers today. Tomorrow, our initial jobless claims and some more housing data. Building permits, housing starts, some manufacturing index data. And then Friday, just some Fed speakers and some more home data at 10 a.m. So a little lighter going into the rest of the week. It'll be interesting to see if our jobless claims start to have an uptick with all of these layoffs in tech. But I've also seen some headlines that the layoffs that we've seen in tech names are still, pretty small numbers compared to previous, previous economic events that led to layoffs, right? We're seeing a large number of layoffs, but it's not too crazy from at least some of the articles I've been reading. Next week, we're pretty light. Monday, Tuesday, a little bit of durable goods, core capital, jobless claims on Wednesday next week because we have Thanksgiving coming up. So short trading week next week. Yep, that's about it. So for today, we have all of our squeezes stacked together, squeezing on pretty much every time frame, 30-minute up to the 4-hour, and the daily is starting to say that it's firing, meaning the daily squeeze is right here. It's starting to disappear today. Now, if we start to drop, that will reappear, and this fired status will go away. But overall today, this week, we've gotten down to test this 3961 once, twice. That's where the buyers are sitting in wait. Even on Monday, even on Friday, when we had that big gap up, gap and go on Thursday. On Friday, after we arrived above this 3961, we have held and held and held. So we know where our floor is. We know where the buyers are sitting and waiting right now. And they've shown themselves a few times this week. We start to give out that 3961, 53, and 41, these three key levels. Then we know we can start slipping down to these key levels below. We have the daily 8 at 3933. The daily, and then 3922, 3900, 3878, where that daily 15 and daily 21 are catching up to. So these are your key targets to the downside should we start to slip out of these squeezes. But if we can continue to hold up that floor, then we know we're going to try to fight back up to 4,000, 4,017, and then up to 40.50. That daily 200 slowly coming down to our key level here at 40.71. So we're in between the daily 8 and the daily 200. We have not seen the daily 200 in quite some time. So let's see if they're going to continue this journey and finally go tap it. With all of these stack squeezes, it's going to be a little hard to just trend straight through them, right? We should expect there we go. We should expect some bouncing around, testing tops and bottoms, and ultimately to start firing these stacked and thick squeezes, we need to start pushing against them, and keep pushing against them to get them to fire. The likelihood, the probability of just dropping straight through them and continuing down is a low likelihood, right? We're likely going to get down and test them, catch bounces, get down and test them and catch bounces, and keep pushing into them to fire down. And it's the same to the upside, just like we've been seeing. We'll get up and test them, and then pull back, and then we'll get up and test them, and we'll see some pullbacks. So to continue higher, it's going to be a rough journey of pushing into some highs and then pulling back and holding key levels, and then pushing a little bit higher and holding the highs that we rejected. Um, so yeah, we've got our targets to the upside, our targets to the downside. Play the range of these squeezes until they start to fire one way or the other. Crypto, I just saw your message in YouTube. McDonald's is hiring those Twitter employees 22 an hour. Hey, there you go. I saw a little blip this morning that Elon took a picture with um, those folks, those two guys that claimed to be Twitter workers that got fired that were like interviewed by the media, but it was all a hoax and they weren't really Twitter employees. I saw that Elon got a picture with those guys, and he like put a caption to the picture of "Welcome back to Ligma and Johnson." Good stuff. Good sense of humor, at least. But we're opening pretty much right where we close, right around 4,000. We have our key levels up and down. Play this range until it starts to break. And if it starts to break down, we know where it's going. If it starts to break up, we know where we're going. The big key targets being the daily 200 and the trend line from highs of year. If this rally is going to continue but then get stuffed, what better place to stuff it than at these key things? But let's move on in Q. And while we're waiting for that to load, here's a little review of our MAs. I like to keep this chart up and visible all throughout the day so that I can see where our 45 MAs from each time frame sit. I want to just show these last 2 days and highlight it because it's worth talking about a vacuum trade. I'm not sure if you guys are familiar with a vacuum trade, so I'll take a couple of minutes here to explain it. There we go. So on Monday, we held our 15-minute 45 and bounce, and we hold our 15-minute 45 and we bounce. When we return to it late in the day and give it out, we dump straight to the next one, the 30-minute MA. Whenever we come to test an MA, give it out, and then drop, and then go straight to the next, that's called a vacuum play. Basically, there is a gap between these MAs. We're holding up, but then when we give it out, it's a vacuum straight down to the next. We kind of saw that again yesterday. You know, the last 2 days have been very eerily similar. Slow grind, big dump. Slow grind, big dump, but recovery. And yesterday we got the same thing with that vacuum trade. If we come over and look, we just slowly were drifting down. And once we hit our MAs and gave them out without a bounce, we vacuum straight through the 15 minute, two, the 30 minute, and then down to the hourly and 2 hour. So we do a vacuum down, we hold, we do a vacuum right back up. So always something to keep an eye on, and why I track these different time frame 45 EMAs. So going into today, we're still holding up at the 30 minute, the 15, right in between them. So as long as we hold that 30 minute at about that 39.94 and push out of our 15 minute at about 4,000, then we can continue this journey back up. If we start to give out that 39.94, it could cause a vacuum trade down to that 39.75. The only saving grace to avoid the vacuum is these free market lows, right? We could slip this 30 minute, 45, just enough to tag a pre-market low. And then if we wick right back up above, then we can likely bounce from there, right? We don't have to complete a vacuum trade every time we give out an MA. It can just be giving out the MA enough to retest something that we already bounced at, basically searching out where the buyers. So, just something to keep in mind. NQ's loaded up. NQ was very strong yesterday. In the morning, it was kind of leading to the upside for the indices and kept holding above VWAP and looking like it wanted to go, while the other indices got underneath VWAP and slipped. So you'd kind of say that NQ was trying to lead but got pulled back with the rest of the market, but it did not really dive to new lows, whereas ES did set new lows lower than Monday. NQ held up above those lows. So relative strength in NQ, just like we've been talking about, NQ needs to start to lead to the upside, but of course, it does have this daily and 2-day squeeze that it's contending with as well. So today on NQ, want to see it hold up above yesterday's lows, since we're setting progressively higher lows. So that means holding up to this 11,800. As long as we can hold there, we can make the journey back up to 12,000 and 12,100. Those are the two key levels before we get up to 12,250. If we start to lose that 800, we've got low of week around 700. We've got our 4-hour squeeze bottom down near the daily 8, and our daily 21 is catching up to our daily 50 right at around 11,500. So if we start to give out 800, first stop is 700, and this 4-hour squeeze bottom, this daily 8 at 600, and then 500 below. But if we can keep trucking, we need that, take out that 12,100, get up to 12,250. And then beyond that, we have a daily Keltner, it looks like 12,500-ish. For NQ, moving on to ready. And I'm going to have to start accelerating through names because we're getting closer to 9. I need to wrap this up soon. Ready up above the daily 200. As long as we can keep holding that daily 200 right around 1875, we can keep trying to push above 1900 and stay above 1900. If we start to give out that 1875, then we have our 4-hour squeeze bottom with our daily 8 around 1860. Should that give out daily 21 around 1823, kind of where we opened on that CPI day. And should that give out the daily 50 right back down at 1780. YM. Let's see. YM. Definitely been a leader, starting to take a little bit of a sideways break. It is starting to set, or at least yesterday, it set some new lows and kind of tested out that CPI open area. YM looking a little weak, like it wants to get back down and retest that area, which is, where we open CPI, where we rejected before a CPI. So YM, if she keeps slipping, likely going to come down and test this 33,400 and 300 where the daily 8 sits. Should that start to give out, back to 33,000, 32,900 where the daily 15 sits. Should that give out, 32,500 where the 21 and the 200 sit. Just talking about if these squeezes fire to the downside. But if we can continue to hold up, let's see if YM can push back up to test this 33,800, which has kind of been some resistance, and that 34,000. But YM has been leading to the upside. It could take a break and go sideways or even a little slip. As long as NQ and Ruddy step up to keep trying to push, ES can keep pushing as well, even if YM takes a small little dip. Apple. Apple almost made it to our next zone before topping out yesterday and coming back to our previous zone. It did set a pre-market low below yesterday's low, but above yesterday's pre-market. So we have some support and some buyers that keep stepping in at these key levels. As long as we can stay above that 147.5 where the daily 50 sits, they might keep buying the dip to take it up above 150 and complete the journey up to this zone in the daily 200. We kind of need Apple to make that trip up to that daily 200 for the market, for ES to make its way up to its daily 200. So these three levels right now are the support. As long as we can keep holding there on Apple, should see buyers start to step in to get it up to complete this journey to 155. If these start to give out, then it's back to 145, 144 below. AMD almost made it to 80 yesterday. So on AMD, I've been calling this out for weeks. 56 is a huge key level. Should hold, should hold, should hold. It held even after earnings. And now we start this big journey, or this big old drive up, almost making it to 80 from 56. So any of my equity traders out there listening, every day in prep, we are calling out very good and potential trades that are coming down the pike. And for weeks, I talked about AMD at 56 and how it could start a journey back up to things like 80. And we've gotten that. So just a reminder to any of our equity folks out there, every day I'm laying out a thesis, and it can turn into, a multi-week trade off of key levels. Let's see, we've made it up to some of these key levels above, almost made it to 80 yesterday, having a little pullback. Today needs to hold 74, 75 to continue this journey to try to get to 80. If we start to lose those, then we're coming back to this 72.3. And should that give out, then we're coming back to 70 and 69 where the daily 8 sit. But wouldn't be surprised to see if we do slip down to hold this 72, now that we've fought above it, hold it and turn it into a support to bounce off of and complete the journey higher. Amazon. Another great example of an equity chart that was called out in the room in our long-term investment channel. A number of our members started calling out, taking position in uh, Amazon when it was below 90 for the run back up to 100. And yesterday got up to 103. I think I saw a number of folks cashed out around there. And now we're coming back and settling near this 97 at the bottom of this 4-hour squeeze. Sorry, 2-hour squeeze. But there is a little bit of a 4-hour starting to form there as well. So basically 96, 97 is the floor right now that it needs to hold. Fought up to it, used it for support to push higher, needs to continue to hold it. Otherwise, we're going to slip back down, potentially to that 91. But if we can keep holding this 96, 97, looking forward to get back to 100, 101, and this 104. Let's see if our squeeze bottoms can provide enough support, this daily 8 and daily 15, to complete the journey. But she did get a full reversion to the mean to the daily 21. So we could always see a rejection of the daily 21 and a push away from the daily moving averages to head back down. BA. Oh, BA pushed up almost to 180 and past third Keltner, and now just starting a slow grind back down, settling near this 175. If BA starts to look weak today and gives out 172.5, likely coming back to 170 where the daily 8 sits with the second Keltner and near one of our key levels. Should that start to give out, back to our next key levels below where the first Keltner sits at that 162, 163. And should that give out, back to the daily 21 and 200, just below 160. If it can keep trekking, obvious targets are 180, 185. Cat. Ooh, made it up and tapped that 240 pre-market yesterday, and then started the drift back. We'll have to see if this is the beginning of names that have been leading to the upside starting to take a break. If we start to give out this 232, coming back to 230 where the daily 8 sits, 228 to where our key level sits. And should that start to give out, it could start a cascade, the daily 15 at 223, the daily 21 at 216, and our key level at 212. Just some key targets if this turns into more of a downside. Coin. I need to accelerate through these names, so I might be skipping one or two. Coin made it above this 52.5. Even retested it and that trend line to try to keep going, but getting hung up at this 56. Let's see if we can keep holding this 52. We could oscillate between this 52, 56 before breaking out higher, with the goal of trying to get back to 60 where the daily 21 sits. So if we can keep holding this 52, 52.5, looking for the drive back up to make it to 60. If we start to give out that 52, then it's right back down to this 46 and this 50 below. Google. And we're starting to slip below that 30-minute. So who knows, we might even be opening near this, the next MAs. Google made it up to 100 yesterday. before having a pullback, but held up well at about 97. Let's see if that 97, which was resistance, it's where we kept topping out. We held it yesterday. Let's see if that 97 can continue to provide support. And if we can get another bounce in Google back up to 100, 101, if we start to give out that 97, then we could slip back to 95, 96, the daily 21, pretty much about to be at 95 today, 94.5. GS. Almost made it to 390 yesterday, pulling back to 380. If 380 starts to give out where that third Keltner to the upside sits, then we're talking about reverting back to some of these moving averages at 372, 360, 352. And if we can hold up at 380 and try to keep pushing, obvious target 390, 395, 400. But she's getting a little extended. I'm going to just skip to Meta. Made it to 117. Wow. Meta, as long as it can keep holding that 113.5 on any dips, wouldn't be surprised for a bounce to keep trying to get up to test this 118, 120 on the way to 123. But she could give out that 113.5 and come back to the daily 21 or the daily 8 at 108, 111. Microsoft. Microsoft continuing to hold 240, 241. We have the daily 50 just below that at 238, right at the bottom of our squeezes. So as long as we can hold that daily 50 at the bottom of our squeezes, we could catch a pop and a drive up to these squeeze tops. You know, as we get close to opening at squeeze bottoms, we can get a strong reaction and bounce, especially when it's early in the day, just like when we open at the top of those squeezes. We get a strong reaction and a rejection. We could get the same when we open at the bottom of those squeezes, get a strong bounce and continuation. So as long as we can hold that 238 to 240, 241, we can try to push back up to 245, 250. We start to give those out, then it's likely coming back to the daily 21 at about 235, and our key levels at 232, 230. Netflix. Netflix, big strong drive up. 1, 2, 3, 4 days pretty much pushing new highs. We can see we slipped a little bit below our key levels at 306, 307. Tag that daily Keltner and trying to keep going. If we continue to give out, you know, that 305, let's call it, then we're coming back to test 300. And maybe even back to some of Friday's highs around 290. But if we can keep holding up here, you know, looking for Netflix to try to continue through the highs at 314, 315, up to 320, and ultimately 333 to finish filling this gap. NVIDIA. Nice push up. Ultimately, let's see if it can hold above 160 at the bottom of that 4-hour squeeze. As long as we can continue to hold up, looking for NVIDIA to try to get back above 165, get back to 170, but it is near third Keltner after getting beat up for a while. So it could be that we've hit third Keltner and we're about to take a break. If we start to give out 160, back to 155 where the daily 8 sits. And potentially this 147 where we topped out. The daily 21 sits a hair below that, but in a day or so it's going to be catching up to that 147. QQQ. Right now, it's all about holding 285. As long as we can continue to hold that. We haven't got down to test it yesterday. We held it on Monday. So if we start to slip through yesterday's lows, we need that 285 to hold up, or else we're going to start the potential move down to 280, where the daily 8 sits, the daily 50 just a hair below that. So we have our downside targets if we start to lose 285. If we can keep holding 285, looking to make that push back up to 290. The top of these squeezes at 293, 292.5 to get to 295 and 300 above. SPX. Had that big gap up yesterday, got right down to fill the gap, and caught the bounce. We should always be cognizant of gap fill plays, right? We tried to hold up, we tried to hold up. Once we give out 4,000, the gap fill is on. We fill the gap, dropping 50 points, and then rallying 50 points. Looks like we're going to be opening about 10 points down. So going to be opening near this 39.80. Ultimately, as long as 39.50 continues to hold up, looking for a bounce to get back through 4,000 up to 40.20, 40.30, and to push through 40.50 to 40.76 where the daily 200 sits. But if we start to give out that 39.50, then it's back to 3,900 where the daily 8 sits. And should that give out back to this gap from CPI at 38.60, the daily 21 at 38.40. SPY. So it's all about 395.8 holding. We have fought above it, and we are trying to hold above it. We did slip below it just a little yesterday, but if you look at the closes of all these candles, it was a slip below and then right back up. Slip below and right back up. So let's see if we can continue to hold that and hold yesterday's lows at the bottom of these squeezes, catch a bounce back up to 400, and attempt to push through to 402. Ultimate goal trying to get up to this 406 where the daily 200 sits. But if we start to give out, we know where we're going back to, that 390 where the daily 8 sits, this zone at 388.5. And should that start to give out, our zone below where our next moving averages sits. Tesla. Key levels. On Friday, Tesla got above this 190. We've slipped below it a little bit on Monday, but we keep holding. Made it up to 200 yesterday, peaked above for just a second. Now back at that 190. So if we can continue to hold 190, the bottom of these squeezes, it's a goal to get back up to that 200 for a test. And if we can actually push through 200, then 206, 209, 210. Our zone above at 206, 210 is now where the daily 15, daily 21 sits. So if we can hold and start to push through, we might get that reversion to the mean. If we start to break down, we know where we're going back to. UVXY. So forward downside yesterday, I said if we break above 9, we could see a push back up to these moving averages. That's what we got in that dump yesterday. Even though the market's gapping down, so is UVXY. So for upside today, looking for UVXY to stay below 9.4, 9.5, and these squeeze tops, and make its way back below 9 to test squeeze bottoms and recent lows. If we're going to see some downside in the market today and maybe fire some squeezes to the downside, we'll likely see UVXY get up to 9.5 and push through it to make the journey up to 10, 10.2 where the daily 21 sits. VIX. Oh, VIX again opened near this 23.3, had a little bounce up and could not get back below 22.5. Was a good sign for a drop. And we made it all the way up to the daily 21 at 26 before rejecting and coming back below 25 to 24. So for downside in the market today, we will likely see VIX hold up above this 24.25-ish, this 24.5, and keep pushing through 25 back to 26 again. But if we're going to see some that's for downside in the market, right? We're going to see VIX pop back up. For upside in the market, want to see VIX give out 24.5, get back below 24, and start the march back down to this 23.3, this 22.5. So that's it for today. Thanks for tuning in. Hopefully this is helpful to everybody. Good luck today, and we'll see you in the chat.